The May jobs report is released on Friday. Economists say non-farm payrolls will increase by 220,000 during the month. And for more analysis, let's bring in Anthony Chan, chief economist at JPMorgan Chase. And Anthony, what will you be watching for in Friday's report? How many jobs will be created in your view?
I think we're going to be looking at around 225,000. I think we're continuing to see the labor market showing signs of improvement. Businesses are feeling a little bit more confident about hiring. Of course, if the economy slips or falters, they may change their mind in the next couple of months. But so far, everything seems to point in the direction of continued job growth.
And you see we're recovering from that weakness during the first quarter. Was that pretty transitory?
I think if you look at the last 5 years, certainly you see at least 4 of the last 5 years, you've seen a lot of weakness in the first quarter, and then you get the bounce back. I don't get too hung up on the seasonal factors because that's the way it's been. If you can correct it, but that's the reality. So I do expect to bounce back in the second quarter. The first quarter was not as deep on the downside, so the bounce back obviously won't be as great.
All right, and of course, this jobs report and all of the ones following this one will be scrutinized extra carefully as the Federal Reserve's looming policy shift sits in the backdrop of investors and how they're watching this.
Well, clearly, and of course, we all know that the Federal Reserve would like to see wages picking up a little bit more. Wages, of course, have been a no-show, up 2.2% on a year-over-year basis for average hourly earnings. But I've looked at the relationship between the labor force participation rate and the unemployment rate and what happens to average hourly earnings, and you're starting to see that relationship strengthen a little bit, certainly over the last 12 to 18 months, which suggests to me that even if you see some small increases in the labor force participation rate, I think you will start to see upward pressure on wages. And part of that is that labor markets are getting tighter, and that's why now any movements in that labor force participation rate will put upward pressure on wages.
All right, so do you think that might prompt the Fed to potentially hike rates sooner?
Well, remember that Janet Yellen has said very clearly she would like to see wages rising between 3 and 4%. So even though we're going to see upward pressure on wages, say from 2.2% to maybe 2.4 or 2.5%, we're still far away from that zone at which the Federal Reserve feels comfortable. So we're moving in the right direction, but we're still very far away from that final destination.
And of course, wages have been historically very low, for decades now.
Not only have they been low, but productivity has been low. And so without faster productivity, that's another headwind for wages, because if employers are not seeing faster productivity growth, they're less encouraged to raise wages. I think wages will go up, but they won't go up as quickly as we'd like because of those negative headwinds.
All right, all issues will be following. Anthony Chan, chief economist at JPMorgan Chase, thanks for coming in.
My pleasure.
I'm Scott Gam, and you're watching The Street.